whether seasonality can spur stocks higher into year's end. Let's ask Liz Young, SoFi's head of investment strategy, with me here at Post 9. It's good to see you. Welcome back.
Good to be here.
So what do you think? As we, seasonality definitely gets better. November, best month historically. December, second best. It's like good riddance to the last three. But, you've been kind of cautious. So what do you see now?
Yeah, well, I mean, the 3 months in a row that we've had since the most recent top in July have been orderly but tough and persistently tough. And it seems to me like there are people looking for more reasons to sell than reasons to buy. And we continue to have this downward momentum. And we're not really getting a lot of reasons to stop doing that. Granted, we didn't have a catastrophe. There hasn't been some sort of negative shock. There have continued to be headwinds. And I think we're aware of what all those headwinds are, which is the good thing. We know what the big risks are out there. But there continues to be this momentum and sentiment that we're just not sure. We're getting to the end, probably, of the hiking cycle. When will those lags kick in, and how bad will they be?
Okay, so that seems to be the central question. Those who are cautious, if not negative, on the market, Dubravko Lakos, JP Morgan, was on halftime.
Yes.
And talked about the headwinds in the macro. The fundamentals are going to slow. The lagged effect. On and on and on and on. And that is ultimately going to mean earnings are too high, and the stock market is as well. And then the stock market's going to correct as a result of all of that. How do you counter that, right? What is the counter to that? That the economy remains strong enough, inflation comes down, Fed's done, earnings are okay? How do you build a case against that?
I think the counter, and I believe somebody, it might have been Josh, said it, something along the lines of the idea that the consumer holds out until this is all over, right? That even the lower end consumer can stay supported until inflation comes down and we get more clarity about rates. I'm not going to counter Dubravko because I agree with Dubravko, and I do think that we're seeing slowing already. We're going to see more slowing. And, we forget that we had 4 75 basis point hikes in a row from last June to last November. I don't even think we've seen the effect of all of those. And we had another 150 basis points after that in smaller quantities. But I don't think we've seen all of that. And the other thing is, we talk about these long and variable lags. The market doesn't really lag so much anymore. The market doesn't lag Fed decisions. In fact, I think it leads Fed decisions for the most part. But the economy lags what happens with the Fed, and we still haven't seen all of that.
I'm going to grant you it's hard to mount a counter argument against that, other than to say nothing about this cycle has been normal. You could easily say, and history would be on your side, when the Fed raises rates to the degree that they do, there's an obvious lag effect that eventually takes hold. Now, probably takes hold sooner than it has this time, because it hasn't really taken hold yet. And then it leads to earnings falling apart, the economy falling apart, the stock market falling apart. But dare I say, this time's different. So much money was in the system. The consumer's much stronger than we ever thought they were. They still are. Now, I know it's bifurcated. There's a difference between the top end and the bottom end. I'm not naive to that in any way, shape, or form. But this time's different because all that stimulus that was in the system, the lag effects that we think are going to take effect aren't. Inflation's going to come down, Fed's going to cut because they can, and we're going to be fine.
There's a wide range of possibilities.
I mean, is that outlandish?
No, but I would
could say yes if you think it is.
I would put it on the tails of the bell curve, right? I wouldn't put it as the central idea and the central thing that I think is going to actually come true. The other thing is, before the pandemic started, we weren't exactly in a really strong position. We were heading into a recession, or many were expecting a recession, and we had a lot of weakness in the economy in late 2019. So we didn't really come into that in a great place, and returning to that place wasn't some sort of euphoric condition that we can say we were running at a really hot pace, the economy was growing rapidly, and we'll just go back to that and everything will be fine. The reality of all of the stimulus that went in the system is that all it does, now there are different forces at play. Obviously, the pandemic had some effects on supply chains, and that's what drove a lot of the inflation issue. But stimulus drives the inflation issue as well. So now, taking all of that back out, when we talk about lags, what we try to do with monetary policy, I'm talking about the grand we, not, what the Fed tries to do with monetary policy is to constrict capital in order to slow down that demand, basically take money away from people and businesses so that they stop spending it so much, right?
They've been, you could make the argument, rather unsuccessful in doing that to this point.
That's correct.
Right?
That's correct. 4.9% GDP growth would say that they've been unsuccessful in doing that to this point. I don't think they're going to remain unsuccessful. I think they're going to get what they want at some point, and I think that point is quickly approaching. And we talked about earnings a little bit and the idea that earnings will have to come down. Earnings have come down. Now, we've had over 50% of companies report so far this quarter from the S&P, but of the ones that have reported, Q4 earnings have been revised down 5%. So the idea that Q4 was supposed to be, I think, originally 9.4% growth year over year, that's come way down off of what we were expecting. 2024 expectations are probably next. So what you're seeing in the market after earnings reports, even on companies that beat, if they beat on the top line and the bottom line, they're still getting punished because guidance has not been what people have been hoping for.
All right.